Hello there, Pursuing Freedom friends. Thanks as always for tuning in. I've got a great show for you in store today. So get ready. I met a gal not too long ago through a national organization of female entrepreneurs and investors where I learned personally a lot about building wealth and different strategies for doing so through passive investing. And I've had a few folks on the podcast this year in order to kind of expose you listeners to different ways to think beyond the transaction. If you're a real estate professional or a mortgage lender, and a lot of the content we have here is around how to build a business and then how to scale that business and then what, right? And if you've been listening for a while, maybe you've been selling real estate or doing loans for a long time, you know that burnout is a real thing. And so what I've noticed in some of my coaching programs is when we start talking about the then what as it relates to what are you doing with your active income, how are you turning it into passive income, how are you helping your clients do the same and be that authority and that lighthouse in the storm, what I found is that there's a lot of people that start to see the light bulb come on and like the flame or the spark is reignited with some excitement around what's possible. And so as I've been on this journey nerding out, I wanted to bring somebody on here today. His name is Troy Eckard. And he's the chairman of the board of Eckard Enterprises, which is a family-owned energy business. And I met one of his team members who was doing a presentation a couple months back, learning about investing in mineral rights. And because I am an avid learner and definitely not the expert, I am not going to butcher what this is all about, but it's really fascinating, not only as it applies to you as a potential investor, but also as an opportunity for you to help your clients start to build that wealth journey. So with no further ado, Troy, thank you so much for being here today.
Thank you for having me. I really appreciate the opportunity.
Well, I would love it, Troy, if you could share a little bit about your backstory and how you wound up with this organization. And then we can start to kind of dig our teeth into what exactly does this mean and how can it be beneficial for our listeners?
Yeah, I can give you a 40-year career in about 2 minutes. So I started out in 1985 as a young individual in the investment world, focusing on high net worth, high income investors that were seeking tax deductions by participating in drilling oil and gas wells domestically. 1986, they passed the Tax Reform Act, which gave a really high tax deduction for high income earners if they wanted to drill wells in the U.S. because we were running out of oil. So that's always been in place, has been for my entire career. It's changed in percentages, but it's always been something that those who have a high income, high net worth, see it as a great tool to defer taxes and also create oil and gas assets in their overall portfolio. That industry, that opportunity transferred me from just brokering deals in the early 1990s to actually starting my own oil company in 1995. And since that time, over the last roughly 30 years, I built Eckard Enterprises, which now is involved in natural gas pipelines, mineral rights, exploration, saltwater disposal wells, and pretty much everything from the wellhead to the refinery. We've done this all through representing individual investors. We don't use private equity or banks. And because of that relationship, it's allowed us to bring the really difficult or what seems complex industry of oil and gas to mainstream. And we've done that in a very efficient way, which has really been kind of a great tool for those who are willing to listen and learn. It's been a great tool, not only from income, but also tax advantages and of course, building wealth.
Awesome. So let's kind of dig our teeth into this because it's kind of embarrassing to admit, but after 17 years in the mortgage business, my husband and I were always investing in real estate. We fell into buying our first home with very little money in 2008 and kept it. It was the best accident that ever happened. We kept it as a rental property and we continued to buy and hold over the years. And it was what we knew. So it's what we did. And I only started learning about these ways to diversify into different cash flowing passive investments in the last several years. And so when I heard of this opportunity, it sparked my interest because if you could just simply break it down. So let's use an example of somebody having $100,000 to invest and what it looks like as it relates to cash flow, because a lot of us have grown up with traditional financial planning as the way to do it, right? Like get a good job, get a 401k, have an IRA, and then hopefully if you make it to 65, you can get your money and live off of that theoretically, right? But most of our listeners are self-employed and there's not a lot of conversation always around different ways to diversify into actual cash flowing investments that aren't just real estate. So can you explain a little bit about the investment itself?
Yeah, I'm going to give you two examples. One is that it's one thing to be successful. It's another thing to be wealthy. So there's a lot of people who take on their career, they make great income, and by the time they're 55 to 65, they realize that they don't have a lot of assets. They made very poor investment decisions. They really don't know a lot about how to make their money make them money. So it's great that you've had a great career, but if you really want to end it with a successful story, you must learn how to take your money and create that passive income while you wind down your professional career. So I like to use analogies. I'm kind of a South Texas redneck guy. I grew up with horses, quarter horses, and I'm going to use investing in alternative assets just like my horses. So we had two pastures. We'd let our horses go in one pasture when the grass got high, and then we'd walk them through a pathway that would go from one pasture to the next, and the next pasture would be ready to be grazed on. So that's kind of like investments with investors. You know, today the stock market's hot, tomorrow it's crypto, then it's oil, then it's this, then it's that, and we all jump around. But investors are just like those horses. They would literally leave this pasture, put their head down, walk on that worn out trail to go to the next pasture, not realizing that the grass in between the two pastures was about up to their shoulders and just loaded with opportunity to graze, but they were trained just to go from pasture to pasture. That's investors. We go from real estate when it's low, we buy it till it goes high, we dump it, we wait back again. Sometimes we jump in the stock market to take advantage of a windfall. You know, then we're into crypto because it's hot for the day. Then we're into .com back in the 90s. And so we're like those horses. We just go back and forth, hoping that we can harvest that opportunity by not being late to the game or not being too early where the door gets hit in our face. Alternative assets are something that's always there. It's something that you have to take the time to learn about. And real estate professionals have the greatest opportunity because they have unlimited income. The more you sell, the more commission you make. The more you sell, the more you can learn your practice. You sell bigger homes, bigger properties, farms, ranches. And so all of a sudden, you've now entered the game of representing high net worth and high income and high value clientele because of your real estate career. But you may have failed to imitate them. What made them own that $5 million ranch? What made them own that $5 million house? And I was very fortunate by saying the best form of flattery is imitation. So as a young kid at 20, 21 years old, I said, I'm going to learn everything I can about why these people are rich, what makes them wealthy, why they're wealthy beyond just their business or being a doctor or a lawyer, what makes them really wealthy. And it was the fact that they were insatiable appetite for learning about alternative assets and things outside of the public market, right? So that's where oil and gas comes in. So you're a mortgage broker, you're a real estate agent, which you may not realize depending where you're at, but there's three rights to every piece of real estate. There's the surface rights, everything attached to the surface. There's air rights, all the air rights above that piece of property that are not attached to the surface. And there's natural resources, which is below the surface called mineral rights. So the epicenter for the oil and gas shale play in the U.S. happened under Dallas-Fort Worth. They started discovering these shale formations at about 5,000 feet deep. And it was turning out to be very, very lucrative. But what they realized is there were shopping centers and home residential developments and all kinds of car washes and sitting on top of these oil and gas mineral rights. And so all of a sudden you had neighborhood associations saying, wait a minute, we have an oil company trying to lease our individual houses because 2 miles away, they're drilling down and sideways for 2 miles. And we get to participate in that revenue because the developer did not keep the mineral rights. He assigned them to each individual house in that final title. So Dallas-Fort Worth was the epicenter of 7 million people sitting on this massive gas reservoir, now being offered lease rights to the minerals they owned underneath their little, 2,000 square foot tract home. It was kind of funny. That accentuated across the U.S. where all these shale basins are that, wait a minute, you better look and see what you own in mineral rights. And I've said all along, title companies should have a disclosure. Are the mineral rights transferable or not? Well, I only own a house. Why would they be transferable? There are people getting checks off of wells drilled 25 years ago, 20 plus years ago in shale formations underneath their houses in Dallas-Fort Worth, still getting checks. When they sold their house, they keep the mineral rights, sell the house, they're still getting checks. So it has become a more mainstream and marketable consideration about mineral rights, predominantly in areas where those shale plays are, which is in about 11 states across the U.S. at this point in time. So you as a real estate agent need to know two things. One, if you're in those areas where there's shale plays, you better be aware of where those mineral rights are because one, you can buy them and make money for yourself. Two, you might want to be that smart real estate agent who understands mineral rights by learning about it so you have a much higher attraction as an agent. I want to list with you because you're smart and you know about that. 99.9% of most real estate agents don't have a clue in that particular category. And I think the other thing is because mineral rights are real estate. Like I said, it's one of three rights. So from a 1031 tax exchange, we've got farmers and ranchers selling 100 acres, 500 acres, and they're saying, I can sell my property in Iowa or Nebraska, turn around and sell that because the sales price of the land is worth more than I can get from revenue from sheep, cattle, or whatever crop I'm raising. I can buy into mineral rights in Oklahoma or Texas that are generating 15% cash flow, do it through a 1031 exchange. Had no idea. As a real estate agent, I need them to list the cheeriest, most sellable piece of property in the world, but they're not going to sell it if they don't have anywhere to go to avoid the capital gains. I need to do a 1031. I better find the solutions to encourage that person or that seller to sell. And I do that by knowing about mineral rights for a 1031 exchange, which allows them to list, and I make the commission in between, and maybe I buy mineral rights with some of that commission as well. So it really has this kind of food chain effect by learning about oil and gas and mineral rights, not only from whether they have the rights, but how to monetize that to a 1031 and the commission that's generated by having that listing agreement.
Well, frankly, Troy, I mean, I love what you were saying earlier about the imitation factor, because we talk a lot about this. When I was coming up in the business, and I was initially intimidated by the clients that were those high net worth people that I felt nervous around, because I didn't feel I was savvy enough at first to be able to serve their needs. And then I realized that if I could replace my insecurity with curiosity, we could have dialogue that would build trust. And so I learned from my clients, even as it related to real estate investing. So what you're saying is like, and I say this to my coaching clients all the time, if you were trying to raise your average price point in your transactions, for example, what I would encourage you to do is connect with the people that represent that target market in your database and pick their brain about how they got where they are and who do they lean on for support, and how do they build their portfolio or their wealth or whatever. And it's not an awkward conversation, because people that are interested in building wealth love talking about building wealth. And so it doesn't have to be anything that's awkward. And I do believe in the fact that learning anything that's going to help you sound more intelligent and educated is going to leave an impression of you as an authority, where they're not going to be shopping around for an interest rate or a real estate agent if they see you as an authority and an opportunity to learn from you in building wealth. One of the things that I will share is that the reason I wanted to have you on the show is because my husband and I personally have, well, now I regret, but we already sold one underperforming short-term rental that was out of state, and we did not do a 1031 exchange. And we have another one that we've been considering selling. And I'd love to kind of break it down for someone who's listening and has, this is the first introduction they have to mineral rights.
Sure.
So let's just like use some numbers, for example. So let's say I have a property that I could sell for 800,000, and let's say we bought it for 500,000. So we have the potential of 300,000 capital gains. Well, if we wanted to, what we could do instead is 1031 exchange that, and we don't have to do the entire thing, but let's say I wanted to put 100,000 or 200,000 into mineral rights, for example,
Sure.
and get an instantly cash flowing asset that replaces an asset that's not currently cash flowing. And
Right.
then I could take the remaining 600,000, for example, and 1031 that into another, let's say a rental property in a place that we'd like to enjoy that could have the potential to cash flow. And we then avoid paying the taxes, and we also gain cash flow immediately. What does that look like logistically speaking, in terms of like let's just use 100,000 because that's an easy number. Like what kind of
Sure.
returns? You mentioned the potential for 15%. Like how does that all play out? When does it start cash flowing? Is it monthly distributions? Is it quarterly? How does that all look?
So I'll start off by saying a lot of times they say what sounds too good to be true can't be true. What I'm about to tell you is true, but it's going to sound too good to be true. So I'll start off by that premise. So the way our company started about 7 years ago, focusing on mineral rights, is we had one first premise, which is we're not buying any mineral right we believe we'll lose money on. It's preservation of capital was number one. It was due to my age, where I've been 40 years in the business. I just don't want to lose any money. So it's purely about safety. Number two is I've got to make a 10% return cash on cash on anything I buy, or I'm not interested, because it is an alternative asset class with less liquidity. And third, I didn't want to buy any mineral rights without having major oil companies actually being the tenant. As the mineral right owner, I'm the landlord. They're leasing my minerals and paying all the money to drill it. So I want only the top of the line, biggest oil companies, because I get all the advantage of their expertise, their skill sets. So that's the first premise. But from the financial standpoint, if somebody were to look at investing in one of our mineral portfolios, we're at about 90 portfolios we've done over the last 5 years. And our average cash on cash return is 15% across all portfolios. So we were shooting for a 10% return, but we're crushing that. Last year alone, we sent out $55 million in cash distributions, no fees, no expenses, no equity splits. So what we now do is we're able to put together $5 million to $150 million portfolios, depending on what we buy. You as a 1031 considered partner says, Troy, I've got 100,000. You currently have a $20 million portfolio. I'd like to put 100,000 in that portfolio. You basically will own your pro rata share of all the mineral tracts, all the wells in that portfolio, 100,000 divided by 20 million. That's your percentage share. So you're not trying to win the lottery ticket. You're not trying to pick the right mineral acre. You're getting a fractional piece of every well and every mineral in the portfolio. Every single mineral tract that we buy has already been proven. They're de-risked. They already have wells producing on them at the time we buy them. We don't want to take any risk. What we're really buying is an immature asset. We know the oil companies are either drilling, they've already drilled waiting to complete them, turn them on, or they permitted saying they're going to go drill new wells on it. And so we're paying a market price today, knowing that it's going to be substantially higher in our view, based on new wells, new cash flow, new proven oil and gas reserves. That's why we like 1031 exchanges, because you're simply trying to avoid that 22% cap gains tax. You're trying to buy immediate cash flowing return. So if you bought in today at 100,000, cash flow starts 6 months after you make the investment, because we got to let the oil company know that we own it, we bought it, and they'll send us our cash starting in about 6 months. Once you get your first distribution, you'll get a check every single month on the 25th of every month, and you get it for the next 25 to 75 years, because these wells will last 25 to 75 years. So the simplicity is 1031 in, 180 days, 6 months from now, you'll get your first revenue check. You'll get a revenue check every single month, 12 distributions a year, and a 1099. Of the income you make, as long as it's not inside your retirement account, not inside a self-directed IRA, 15% of your income you don't pay taxes on. The IRS says, look, you're depleting a reservoir like depreciating real estate. 15% of your income you don't pay taxes on. So that's another advantage tax-wise by having a lower tax rate on that income. So the idea is, well, what decisions do I make? What risk do I have? What kind of cash calls? What about liability? What about wells blowing out? You take none of that risk. When Exxon signs a lease from the minerals we own, in that lease document, it says, you mineral owners are going to retain, in this example, 20% of all future income from every well drill, from every formation, for all the oil, all the gas, everything we sell. You get 20% of the income gross before expenses first. You're first to the food truck. Okay, great. What else do we get? We, Exxon, assume 100% liability, environmental, drilling, plugging, abandonment, reclamation, cost, expenses. We don't care. Storms. 100% of liability falls on the operator oil company, and you are not bound by any liability, zero. What's the holding cost? There's no property tax. There's no holding cost. It's the only asset I know of I can own without anybody digging in my pocket over the next 25 years. So you realistically have a 100% net cash flowing asset, 12 distributions a year, a 1099, and a major billion-dollar oil company taking all the risks, sending your check. If they don't send us our check, the lease expires and we get all their oil wells. So we always get paid. Even if that oil company files bankruptcy, we get paid first, and we get paid for every dime. No other asset exists like this. It is truly the most passive asset you can own. I have never written a check for minerals I've owned for over 35 years. Never written a check. I get my check every month.
And then is the income from a tax filing perspective treated then as passive income? And so
ordinary income.
Ordinary income. Okay.
So I make $1 million and I make $500,000 in my minerals. I got 1.5 million. So it is a income source. And what our clients will do, Aaron, is they'll say, okay, I love making income, but how do I use the IRS's rules to help me reduce that income? Well, 15% is not going to be taxed. But then what a lot of our clients in that high income bracket will do is say, well, what if I participate in drilling the wells that are on the minerals that I own? Now I'm an active participant. So I'm getting 20% income for free. I want to drill as part of the 80% that's paying all the cost to drill. The IRS says you'll get about an 80 to 100% tax write-off for every dollar you invest. So I'm getting great income as royalty. I invest in the well, so I'm getting 80 to 100% write-off. I'll put $100,000 in drilling, $80,000 to $100,000 goes off my gross income this year. So a lot of our clients are buying minerals, making income, drilling wells to offset the income, and they're just compounding the increase of their net worth by the oil and gas reserves in the ground, and they're increasing their revenue by using tax deferment based on the IRS rules from the drilling of wells. So it becomes really part of your entire portfolio. You're really using this to manage income, create passive income, and you're truly working toward being wealthy by not trying to sell the next house or next building to make commission. I'm taking my commission, putting it to work. So over the next 5 years, I have an income higher than what I'm making by being a commissioned real estate agent, mortgage broker, or anybody else.
So here's a question I don't know if you can answer this one or not, but I'm thinking about it from my own personal perspective. And if I were to try to do a 1031 exchange, a traditional, what we all think of as real estate professionals, I'm thinking I have to get this property sold. Before I sell it, I enlist the help of a 1031 exchange expert. Once I've closed on the sale, I have 45 days to identify a property. I've got 180 days to close. And all of a sudden, as a mortgage lender, I remember these transactions tended to be laden with a little higher level of stress because of the timeline. And God forbid, the house that they found, it falls through for some reason or whatever. There was a lot of, pressure. And so one of my questions is, as it relates to this strategy for somebody who, let's say you're a real estate agent, you've called on your clients that all have rental properties and you're just checking in. How are they performing? How's that working out for you? Whatever. And you hear some frustration and you say, it's not just the only option is not just to go buy another property if you're kind of burned out on tenants and toilets, basically.
Yeah.
There's another option too that might be worth exploring, and I can make a connection for you to learn more about it. How quickly does that transaction, what is the gestation period of like, I want to invest and then I close on that and then we close out the successful 1031?
So last year we did $300 million in mineral acquisitions. We had projects open pretty much every day of the year. We had 1031s from as simple as a $100,000 house they flipped up to, we did a $6.3 million 1031 in November, and the individual was down to like the last 5 days. We had a portfolio that had 256 wells in it. Got another 50 wells being activated since the time he bought it in November. But the key was identified it, closed, and the reason why it works so well is Eckard, my company, buys the minerals track by track, acre by acre. We inventory that, and then we hand select the various mineral tracks based on maturity, which ones wells are coming online, to create the portfolios, which means that any time, whether your closing gets delayed or the 1031 gets delayed, we don't care. When you're in that 45-day window, you tell us, hey, Troy, I want to be in project number 1. You're in. I don't worry about you closing because I've already paid and own it. I own it already. What that allows is a very comfortable 1031 exchange in that you, the seller of the property trying to do the 1031, you're very relaxed knowing Eckard always has a cash flowing portfolio ready. What we have a tendency to do is let that 1031 exchange potential partner, are you looking for a higher cash flow 1031 exchange, meaning more producing wells, or would you rather pay lower cost basis and have maybe a delayed cash flow? It'll still do as well, but it's not going to be all in the first year, maybe the second or third year, but you have a lower base. So we get to actually kind of match that 1031 with what that desired 1031 exchange is designed to look for. So it's kind of like picking and choosing your real estate. But the key is our clients have figured out 1031s work. They love it in oil and gas mineral selection. And we've got big partners saying every time I sell, I'm doing mineral straight into what you're doing. They're dumping rent houses. They're dumping headaches, like you said, toilets and tenants, saying, I don't ever want to do that again. All I get from you every month is a check, and I don't want to hear about anybody's faucet not working.
Yeah. So so like, let's say, for example, someone's listening and they have a client they want to sell this one property and they want to go buy another property. And then it starts getting stressful. They're losing out on offers. It's like coming down to the wire. They're feeling like they're approaching the deadline. How much time does Eckard need for that client to pivot?
1 day. I mean, if we have a package open, you just got to pick the phone and say, I got 250 grand. I got 2 days left. Well, here's our current portfolio. The beard, it's got $8 million left. How much you need? I need 250,000. Here's the exhibit. Here's the DocuSign PSA. The wells are already producing. You've already got 3 months worth of cash flow because we bought them back in October. So you've already got 3 months income. We're distributing May the 15th because it's distributing in 160 days. You can 24 hours, sign the PSA, you're in. You can report that to your custodian, your qualified intermediary. You're in, and you'll start seeing cash as early as May. It happens every day. We get calls every single day with people going, I sold it, I'm down to the wire, or hey, I'm planning on selling. We have clients with like 40, 50, 60 houses in their portfolio, and they're just systematically selling a house a month or a house a quarter, dumping in minerals and just replacing that rental income with royalty income and going, I should have done this years ago. I said it wasn't available years ago. That's why. This is a relatively new asset class, in my view, over the last 5 to 10 years. It's relatively new in the way it's being done, how low risk it is, and how profitable it is. And it's all because of the revolutionary shale and fracking that's going on, which created this window of opportunity. So it's not something you can pick the phone up and call 10 people selling minerals. They're not out there. So this is kind of just a perfect timing, evolving asset class. And I've been able to use 40 years of expertise to corner it and bring it in the way that I do that makes sense and makes profit.
Awesome. Okay, one more question. How does, I guess that's a two-part question, but I know what it looks like to own a property, see it appreciate, sell, etc. What happens if someone's put in, let's say 250,000 in that example, and something happens, a major life event happens a few years from now, and all of a sudden they're looking at like all their entire wealth portfolio and they need some cash, they need it now. What does it look like then to sell your acreage that you've bought? Because it's not shares, it's acres. You right, you're actually buying
You physically own described deeded acres. Yep, you do.
Yeah.
So because I've been doing this for so long, and I started when I was 20 and I had hair and I didn't look so ugly. I started as a kid. I've lost a lot of investors who passed away over the last 40 years. And so one of the things I notice is how difficult it is for estate planning and kids and transfer of wealth. And hey, dad loved oil and gas. I don't know squat about it. How do I monetize that? We've had several partners die in the last 2 or 3 years because of COVID and car wrecks and divorces, et cetera. So we built our own alternative asset app called Eckard Insights. If you go to our website, you go to eckardenterprises.com and you pull up Eckard Insights, it's the only app in existence in the US that pertains to alternative assets. We spent about $3 million developing an app to make buying mineral rights mainstream. You open up an account, you see all the education, you buy in a portfolio, everything from how much oil and gas is sold, all the revenue checks, the statements from the oil companies, your deeds, titles, it's there. We complemented that last year by adding another tool, which is called our P2P or peer-to-peer market. We don't charge commissions, we don't charge fees. We said, look, in order to help those who have health issues, portfolio issues, estate issues, let's let a partner put minerals they want to sell onto the app in the marketplace. Now you have 2,000 alligators eating chicken wings. You got 2,000 high net worth investors loving to buy more minerals, and people are posting, and it's just going like hotcakes because we all want more minerals and we all want to know we can liquidate. And so because you're all involved in minerals, it's really easy for those who want it to buy more from those who are already in projects they're probably already invested in. So we spent the time and money to create that. We're thinking maybe in the next couple of years, we might open it to an outside third-party market, which means just even crazier, dumb buyers. But I say that because it was important we had a liquidity opportunity. We're probably the only company in alternative assets that has that feature available to investors. Nobody else will get you out of multifamily or anything else. You're stuck. I created the only liquidity concept that I know of in the alternative space.
And is there typically appreciation, I mean, with land and the values, or what does that look like?
So think about oil and gas like a 3-liter Coca-Cola bottle, right? If I shake that bottle up, I'm gonna get a lot of shaken, fizzy oil or Coke coming out of that bottle, but it's only got 3 liters. It's got a finite amount. So at the end of the day, if I buy minerals today based on what the wells are producing, how much Coke's being poured out at 3 liter, well, it's basically how long does it take to get a certain amount of Coke out of the bottle? I'm willing to pay for that today. That's kind of how you have the market value for minerals. How many wells are on there? What's it producing? What the income looks like? What they don't do is they very rarely give you the value of the other remaining Coke in the bottle that's not coming out, which is the oil and gas reserves. But it's so different today because now when you look at West Texas or Oklahoma, it's not just one formation that has the oil and gas. It's so saturated and has multiple reservoirs. Today's market value is only paying for what we know, which wells are producing from what zone. Exxon, Chevron, Oxy, Diamondback have all collectively spent about $200 billion in the last 6 months buying out other major oil companies. And what they're saying is, we know that in the mineral rights that are being developed today, it's a fraction of what they're worth because 10, 12 years ago, these shale formations were given zero economic value. We did not know how to produce it. We couldn't figure out how to frack this tight shale. We couldn't get wet concrete to flow. So zero value in about 2008. Today, we're the largest oil producer in the world because we figured out how to crack that rock and put a horizontal straw in it. So now we're at about 8 to 9% recovery. So out of all the oil and gas in place, we're only getting 8 or 9%. 14 years ago, it was zero. What Exxon, Chevron, Oxy, Warren Buffett are counting on is we increase that to 9%, 10%, 12%. And so today we've got $800 million worth of minerals we bought through Eckard and our partners in the last 4 years, 800 million. we'll cash flow about $100 million this year, 15+% return on our money. I believe that's just going to go up in time because they keep drilling more wells. So to answer your question is, if I sold today, if there's not it's been entitled, but there may not be a major change in the number of wells drilled because it's been a year or 2 years. But I'm making great cash flow, 15 to 30% cash on cash per year. But in 3 or 4 years, they realized the second zone, there shouldn't be 2 wells, there should be 5 wells, should be 6 wells. And so what happens is I might have cash flow for 5 or 6 years, then they drill the second round of wells. I'm back up to a higher cash flow than I was day one because they're brand new wells at a higher commodity price, or they're performing better because technology's improved. So the reason I'm not a seller is minerals I bought 6 years ago for $3,000 an acre now go for $15,000 to $18,000 an acre. The reserves didn't change. They just drill better wells, more wells, and they can extract a higher percentage. So I always will tell you that oil and gas is a depleting reservoir. If you drill some wells, there's no other zones, no other opportunity, they're going to eventually deplete. So for me, I can go put $1 million in rent homes and hope the tenant doesn't tear the house up, hope my cost of capital is low, hope I don't have too much in the way of depleted net income by all the offsetting costs, insurance, et cetera. Or I can go put $1 million in minerals and hope I get my money back in 6 years or less, and they last 25 to 100 years. I love getting checks with no obligation. I just love every day getting checks in my account with no offsets, no expenses. I get 12 checks and a 1099. So the trade-off is, from a traditional real estate mindset, is I don't have an asset I can go sell for 150% of what I bought it for because the appraisal value is there. You have to rely on the fact that where we're buying minerals has multiple zones, they're underdeveloped, and the future of development will take us from that 8% recovery factor to maybe 10, 12, 15% over the next decade or two. That's why Warren Buffett put in $50 billion in Chevron and Oxy. He fully believes his bet's worth 5 to 10 times what he invested in. Same thing I'm betting on.
Yeah, totally. And, I wanted to have you on the show because, like I said, I mean, anything that's new for me that kind of sparks my interest, I want as many people to know about as possible. But it's such an interesting solution to a challenge that we're facing personally, where, maybe we bought at the peak of the last rising, whatever. I mean, we got in maybe too late. I don't know. I mean, it is what it is. Not every investment performs as well as the others, but now we're facing a reality of an underperforming, not cash flowing investment property that we don't want to pay capital gains on it. I don't know that I want to go transition it into another investment property with the current interest rate, seeing that I'm selling something at 3.75%. And, it's intriguing. And so I love it for myself. But again, for those listening, it's just like what Troy was saying earlier on about, learning from anyone and everything that's going to help you show up more educated with more authority for your clients so that they don't need to shop you around because they're looking at you as a trusted advisor and somebody that has solutions. And so at a minimum, understanding this is going to make you show up differently than some of your peers. And you can thank the Pursuing Freedom podcast for that. Just kidding.
I want to give your audience a very simple example. I'll make it quick, but this is an example. So I understood oil and gas mineral rights, but I used to live in San Antonio, and back then water rights were a big deal. So I'm trying to buy or lease some mineral rights to drill some wells south of San Antonio. The farmer says, "Hey, look, I'm in bankruptcy." Talk to my bankruptcy trustee. I call the guy up and he says, "Look, he's in bankruptcy. He needs to sell his oil and gas mineral rights." I said, "Okay, I'll look at that." He goes, "By the way, he needs to sell this piece of 100 acres of farming that he has too." This goes how your real estate agents can make a lot of money for themselves. And I said, "Okay, so he's selling 100 acres." I said, "What's he got?" "Well, he's got corn. He's growing corn right outside of San Antonio." So I pull it up. I look at it, understanding mineral rights and water rights. I said, "He also owns the water rights." He goes, "Yeah, he owns the water rights." I said, "Okay, so you want $1 million for the farm, $10,000 an acre, no problem. Great. I buy the 100 acres, pay $1 million. I put 200,000 in equity, financed 800,000 on a short-term note at the bank. The day after I closed, I sold the water rights for 550,000. They were worth 5,500 an acre. He did not know that. I sold the water rights for 550,000 the next day. I turn around and reach the archdiocese because I knew it was zoned, which would allow for a future cemetery location. I sold it for $1.2 million. So I made $700,000 in about 2 weeks on a property I bought for $1 million because I understood mineral rights, water rights, and I knew about the surface. So my whole career has been understanding the entire food chain. And you, as real estate agents, there's a whole dynamic, valuable world going on underneath the ground. So you got Pennsylvania with the Marcellus, unbelievable. You got huge oil and gas reserves in Ohio and Virginia that most landowners don't even know. I've got a client up there buying mineral rights for $300 an acre in the tax office, where the oil companies are paying $10,000 an acre for that same mineral right. He's buying it for 300 out of the tax office. So the thing is, by at least learning about mineral rights, whether you invest your own money or you direct your potential client that you're signing up for that listing agreement, saying, hey, I've got an exchange potential if you want to consider being educated on the front line. There's also, as you're poking around online, you might say, where are these oil and gas bases? Where are some real estate? You might find the house is worth 50, but the mineral rights are worth 150. That's really what happens. And people just don't know what they own.
How do you find that information?
Well, you get to know Troy Eckard, you become my partner, you come to all my conferences, and all of a sudden I've got clients who own mineral rights underneath areas they didn't even know was successful. They're out buying neighbors' rent houses knowing that they have the mineral rights attached to it, because they're going, I can lease the minerals for more money than the house is worth. In Oklahoma, the land is worth like $2,500 an acre. The mineral rights are worth $12,000 to $25,000 an acre. And some people inherited 10 acres and they got a mobile home from Uncle Johnny, and will come along and say, hey, we want to buy your mineral rights. Well, do I own the mineral rights? Yeah, you do. Well, how much are they worth? Well, we'll pay you $10,000 an acre for that 10 acres. You're going to get a $100,000 check for your mineral rights. Oh my God, my mobile home's only worth 20 grand. Here's your $100,000. And they don't have a clue.
Wow.
So it's enormous. It's 400 million acres across 9 states in the primary area of the U.S. that have mineral rights that are filled with oil and gas. Very finite, very geographically specific, out of 2.2 billion acres in the U.S. So we know where it's at. We know where it's located. The key to oil and gas mineral rights success is you got to buy it where somebody's going to punch a hole in it. So you don't want to buy mineral rights unless you know somebody's going to drill a well, which is why we go into areas that are already leased. We know who's the lessee. It's Exxon or Chevron, and we know they've already proven it, and they got more wells coming. You can own mineral rights all day long, but if somebody doesn't drill a well, they're worthless.
Wow.
So I suggest all your listeners go on to Eckard Insights. We've got hours and hours of education. I firmly believe, Aaron, the smarter you are, the more diversified you are, the more education you have, the smarter real estate agent you be, the smarter mortgage broker you be, the smarter investor you'll be. I think the smarter I make you, the more you're going to know that Eckard is a great energy company, but more importantly energy is a great asset if you figure out how to quickly learn how it works. And I think you can do that by just following some of the stuff that we do.
Awesome. So apart from Eckard Insights, is there anywhere else they should find you, follow you, or just hop straight over to the website?
I'm kind of lazy. I have a Talk with the Tex and Money and Life podcast I do, and that's mostly for fun with my rich guys. They love my comments because I'm so outspoken. But I just do a ton of work on Eckard involving pipelines and drilling, and I try not to get too political. I've been kicked off LinkedIn for life, and I get in trouble all the time. So I got to keep focused, otherwise I get banned from every single social site out there.
Oh my God. All right. Well, Troy, I really appreciate you taking the time to be on the show. Thank you so much for coming here and giving us all this good content. It's so good.
Anytime I can help you, let me know. If any real estate agent needs to get hold of me and just ask questions, I got a great wealth team. I got a great 1031 expert. I got a great self-directed IRA expert. Just call our office. We'll help you. We want you to be successful and make a ton of money, because it helps the world go around. The more money we can make you, the more money you make your clients, the more money it is for all of us to grow our economy.
Awesome. Well, thank you so much. And to all my friends listening, thanks as always for tuning in. I love you. I appreciate you. I'll see you next time. Make it an awesome day.